You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 15th day of December, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. First live broadcast is our live training room. Now, that broadcast is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the very top of the page, there's a link that says 5-day free trial. Click it, complete the registration form correctly, please. Otherwise, it won't get to us in the way that it needs to get to us, and we won't be able to turn on your indicators or activate your trial. So take a minute, make sure you have everything filled out correctly. Submit it, and if you do it correctly, we will, in most cases, get your desktop and set up and your indicators indicating all the same day. And the following day, your trial will start. Now, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, because once we get you all set up, you're going to get 5 consecutive days, even if it stretches over a weekend. And today being Friday is a great day to sign up because it gives you the weekend to kind of familiarize yourself with the indicators. And we hit the ground running Sunday night when the Globex markets open. So if you sign up for the trial today, you'll be able to join us Sunday night. But if you're just a Monday through Friday kind of trader, well, then you can join us Monday morning. But your trial will go from Monday through Friday. Sunday night will just be a freebie. Some Sunday nights we have some incredibly awesome action in the futures markets. Some Sunday nights we don't. So never know what you're going to get. Just got to show up and find out. When the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What'll happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. What's the benefit of that? Well, it gives you access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you'd still like to join live. And there'll be days when you're busy and can't join live, but would like to check it out later. In both cases, you can. I'm talking about our YouTube channel, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,300 daily episodes archived for your educational and entertainment pleasure. Also, if you're new to the world of CFRN, it's a really great way to get to know who we really are. Not just today or this week, but thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, 3 years, even more. And just, pick a couple days at random. Just listen in a little bit. Get the feel of things. You'll quickly spot the thread of continuity, the thread of connectivity. It's woven through each and every daily broadcast, and even that same thread that's woven through our very vibrant trading community. So be sure to check it out, youtube.com/CFRN. And on the afternoon broadcast, we focus a little more on the longer term trading. Now, we're going to open here in just a moment with our daily devotional, a word of prayer. We'll take a look at the numbers from around the world. Then we'll start the recap of the logic alerts and the concierge trade alerts. And then 45 minutes in, Michael will pop in and he'll give us a recap of what happened this morning in the live training room. And then at 1 p.m. Eastern, we'll go live on the TradingView platform, 30 minutes. And then when we're done with that, I will complete the recap of all the alerts, both the logic and the CTAs, or the concierge trade alerts. So let's get rolling. Now, the topic of our devotion last week and this week has been the Apostles' Creed. Our scripture today, 1 Peter chapter 2, verses 4 through 10, and I'm sharing with you from the Message translation. Welcome to the living stone, the source of life. The workman took one look and threw it out. God set it in the place of honor. Present yourselves as building stones for the construction of a sanctuary vibrant with life, in which you'll serve as holy priests, offering Christ-approved lives up to God. The scriptures provide precedent. Look, I'm setting a stone in Zion, a cornerstone in the place of honor. Whoever trusts in this stone as a foundation will never have cause to regret it. To you who trust him, he's a stone to be proud of. But to those who refuse to trust him, the stone the workman threw out is now the chief foundation stone. For the untrusting, it's a stone to trip over, a boulder blocking the way. They trip and fall because they refuse to obey, just as predicted. But You are the ones chosen by God, chosen for the high calling of priestly work, chosen to be a holy people, God's instruments to do his work and speak out for him, to tell others of the night and day difference he made for you, from nothing to something, from rejected to accepted. Now again, that was 1 Peter chapter 2, verses 4 through 10. As brothers and sisters in Christ, we're united by faith in the Son and adopted by the Father Almighty. The Apostles' Creed gives a unified voice to Christians around the world and throughout history. We're a global family waiting for a heavenly home, or in the words of the Creed, the Holy Catholic Church, the communion of the saints. From this line, 3 words should be re-emphasized for clarity: Catholic, saints, and communion. When the Apostles' Creed says the Holy Catholic Church, it's referring to the body of Christ, to which all Christians everywhere, over all time, belong. The word Catholic is translated from a Greek word that means according to the whole or universal. In saying the church is Catholic, we're affirming that all Christians everywhere are included in the communion of the saints. Therefore, the term Catholic isn't a reference to a specific denomination or to what we know as the Roman Catholic Church. All Spirit-indwelled, gospel-believing, Jesus-exalting Christians are part of the Holy Church. Second, when the Apostles' Creed says saints, it's another reference to all believers. This isn't a reference to a position or status in a church reserved for a few exceptional individuals. All 60 times the New Testament uses the term, it indicates all Christians. In the language of the New Testament, the word translated saints literally means holy ones. In Christ, we've been made holy. The saints gather and commune as the church. Finally, when the Apostles' Creed says communion, it's referring to the communal gathering of the saints, Christians, as the church. Essentially, the phrase, the Holy Catholic Church, the communion of saints, is purposely redundant, emphasizing the totality and inclusivity of all believers in the body of Christ. Because we've been made in the image of God, we're more valuable than the rest of the created order. God desires to commune with us as his people. The tangible presence of God is most often revealed in the communion of saints. It's God's good design that we belong to a local church, not that we go to one. There's an important difference. God has invited you into something greater. New relationships, new community, and new life as his church. Join me in a word of prayer. Heavenly Father, as we come together in prayer, our hearts are drawn. 1 Peter 2. Lord, we are grateful for the assurance that we as living stones are being built into a spiritual house, chosen and precious in your sight. Thank you for the foundation of our faith, which is Jesus Christ, the living cornerstone. As we gather to pray and reflect on your word, may our lives be continually aligned with this cornerstone, rooted and built up in him. Lord, help us to embrace our identity as a chosen people, a royal priesthood, a holy nation, and a people belonging to you. May our lives reflect the praises of the one who called us out of darkness into his wonderful light. Grant us the wisdom to live as exiles and strangers in this world, maintaining a conduct that honors you. May our actions and words testify to the grace and love found in Christ, drawing others to the truth of your gospel. As we offer our prayers and praise, Lord, receive them as a spiritual sacrifice, acceptable through Jesus Christ. May the spiritual house being built in us bring glory to your name. And it's in Jesus' name, believe and pray. And everybody said, amen. Okay, happy Friday. It's a happy Friday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. And by the way, today is quadruple witching day, I was told. Has nothing to do with broomsticks or black hats, but you can always Google it. Okay, cash markets, the Dow up 37 points, NASDAQ up 65, S&P 500 up 2.5, the Russell 2000, our man in the street, down 8. So, relatively pretty quiet trade. In the commodity basket, crude oil up a dime, trading 71.68 last. Gold up $3.50, trading $2,048.50 last. Silver down 9 cents, trading $24.29 last. Now, in the live training room this morning, we did roll the crude futures contract forward to the G contract. On my chart, you'll still see the F contract. It's still tradable. There's still volume there. The first 3 minutes the market was open this morning, we traded over 600 contracts on the F contract. But come Sunday night, when the alerts come out, and Monday morning when the weekly zones come out, we will have rolled over to GCLG 24. Okay. All right. In the Asian markets at the close, Nikkei posted a gain of 284 points, almost 1%. Shanghai dropped 16. The Hang Seng gained 390, which is almost 2.5%. In the European markets, at the close, FTSE down 72, the DAX unchanged, the CAC up 21. So that gave us a mixed day in Asia. It was a mixed day for the UK. And so far, it's a mixed Radio Friday here in the US of A. 3 of the major indices in the green: Dow, the NASDAQ, the S&P, not by a lot, and the Russell in the red, again, not by a lot. Okay, so that is where we stand. Let's jump to Logic 247. What a week it has been. This recap is valid through 6:30 a.m. this morning. Valerie will finalize the recap for the entire week this afternoon, this evening. We're currently in week 280, Logic 247. Over those 280 weeks, we've issued over 15,600 individual handcrafted alerts, every one of them a trend trade, not a counter trend trade in the bunch. Not that there's anything wrong with counter trend trading, but we have lots of people coming to us to learn how to trade. So my experience has taught me that to find the highest probability, lowest risk trade setups, it's best to trade with the trend as opposed to against the trend. You could liken it to swimming upstream, which can be difficult, or just floating on an inner tube downstream. Go with the flow. Now, as you gain experience and become very good at trading with the trend, then at some point in your career, you may choose to start experimenting with counter trend trading, and that's perfectly fine. In the beginning, you'll find that if you use your 30-minute chart as a roadmap to help you determine the trend, along with price and the 30-minute BBC, that's the green line you'll see on my chart, it will make things a little simpler for you. Okay? Now, this week, now it started off incredibly brutal. Okay, Sunday night, here goes. Sunday night, we had issued a total of 7 alerts. We were still waiting on 4. We had 3 actionable alerts, and every one of them got stopped out based on market structure and a very simple process that I teach all of our lifetime members in their unlimited one-on-one mentoring sessions. So this is what I showed you on Monday. We don't sweep stuff like this under the carpet. This is the truth about trading. It happens. So Tuesday, a little better. We're down to 45% stop down. Wednesday, even a little better, 33%. Then 27%. And now today, 22%. Now, when Valerie did the recap this morning, there were still 5 waiting. Some of those have resolved themselves, and I may have issued a couple of new alerts today. So we'll see where we end the week up. Again, what we've averaged on a weekly basis over the last 280 weeks is 20% or less based on market structure. A very simple process that I teach all of our lifetime members. And if it doesn't get any better than 22%, that won't faze any of us at all, because we've had weeks that were 3%, 4%, 5%. Now, along with the logic alerts, we still have our original alert service going back many, many years. The concierge trade alerts. They're a little bit different in a couple different ways than the logic alerts. Okay. With the logic alerts, I not only give you entry, initial target to help you get your goal for the day, and then sometimes multiple targets, including a final trade to target. Because I've looked left to spot potential obstacles, previous swing highs and swing lows that can become obstacles to the trade that you're in. With the CTAs, you get to look left yourself. It's part of the learning process. You see, our goal is for you to become independent, self-sufficient. Hopefully, that's your goal for you as well. Here's the thing. If your goal is to trade for a living, you can't do it waiting on somebody else to tell you when to get in and when to get out. You got to be able to look at a chart, read it like a roadmap, a newspaper, a good mystery novel, and then take the appropriate action once you learn how to define the windows of opportunity. Okay? So it's a process. Welcome to the process. Now, the logic alerts can come out around the clock, 2 a.m. or 2 p.m. because futures trade around the clock, and we have traders around the globe. Their day session is our night session and vice versa. Now, I just spoke about futures, but our strategy and our indicators are equally fluent. Stocks, crypto, Forex, ETFs, doesn't matter because price flows the same across all markets and time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. The CTAs don't come out around the clock. They're posted as a static report shortly after the Globex open. So last night, Globex opened. The Friday session, which we're in today, began last night at 6 p.m. Eastern. So 10 minutes into the open, I provided all these targets for our members and our trial members. Now, this broadcast is open to the public, so if you want to grab a screenshot, you can. If you're watching after the fact on our YouTube channel, just hit the pause button and jot down whatever numbers are important to you based on whatever markets you trade. Because before this broadcast ends today, if my software here doesn't crash, as it did this morning, we'll go through every single one of these markets. Okay? So, when this report is published, as it was last night at 6:10 p.m. Eastern, what's the first thing you do? We use the ES as an example. Go to your 30-minute chart and make note of where price is at this time. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, that's that green line I was talking about, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC simply stands for bull-bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and we anticipate lower prices. Whether it's a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, or a range chart. So whatever type of trading you do, whether you're a day trader or a swing trader or a scalper or even an investor, what we have will work for you. Now, as I said, with the CTAs, you're stepping up your game because you're looking left yourself to spot potential obstacles. Here's a little hint. Look at the logic alerts where I've already pinpointed the obstacles, okay? And you will learn over time how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the minute the markets open Sunday night till they close Friday afternoon, if price gets above the 30-minute BBC, it's trying to get to the weekly zone overhead. If price gets below the 30-minute BBC, it's trying to get to the weekly zone below. We've published the zones since December 14th of 2009. Once you truly get comfortable with them, they'll become one of the most powerful tools in your trading toolbox. They're published every Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. Even when something wacky happens, like it did this week, where we typically don't roll over until Friday. This week, we ended up rolling over, I think, like Tuesday. Then we had the Fed meeting Wednesday. That's okay. Really only affected the indices. The other markets are still doing exactly what they do. And there's a high probability that by close of business today, even the indices will drop to the highest weekly trading zone. Okay? All right, beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. There's so much stuff out there. So many indicators, so many oscillators and algorithms and just stuff, you know. Your inbox fills up with it every day. You've got to separate yourself from that noise, okay? There is no holy grail. The only holy grail in the world of trading is actually learning how to trade. Now, we do have some very simple indicators that we use just to help us stay on the right side of the street and to help us pinpoint our entries and where we take profit. But with me, more than indicators, it's market structure. But the few simple indicators that we do use, I find very beneficial. I think you'll find them beneficial as well. Okay. Michael, is that you I hear in the background? Yeah, I guess I was just hearing myself. Okay. Maybe he's just getting ready. Daily chart. Okay. These are fib retracements, okay? This is the most recent swing high. This is the 24% fib retracement. 38, 50, 62. I added the fib extensions, okay? Now that's the same Fibonacci math you used to create the retracements, but in the opposite direction. You see, the fib retracements are areas where as price drops, you expect the market to find support. Here, 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 and here. Now, keep in mind, these fibs didn't become valid until this new high was put in, okay? So don't look back over here and try to go, oh, well, I overshot the 62. That wasn't the 62 then, okay? All right. Then last night, along with the fib retracements based on this new high, I also did fib extensions. That's where you use this tool, connected the low to the swing high to the retracement low, which is right at that 24% fib. And it projects into the future where we may find resistance. Remember, coming down, these are areas where you anticipate support, and on the way up, where you anticipate resistance. We're already at the 38% fib extension of this entire leg up, okay? There's the 50, the 62, the 100. And why are we even looking at a daily chart? Because the institutional traders, the ones with the humongous account sizes who trade in size that you and I can only imagine, they're the ones that actually move price, okay? They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, stick charts, and range charts. Again, it has to do with account size. So if whatever you trade, whether it's a different futures market, a stock, a crypto, forex pair, or an ETF, if you'll spend just 2 minutes studying the daily chart of that instrument, you will see your trading results change, okay? Because this allows you to identify major areas of resistance and support. Price were to start dropping, we would expect support here at the black step line, at blue and climbing, right here, and at the BBC, and then finally at this area, the 24. Now what's interesting is we were tied up in a range here for almost 2 weeks. But once we put in this new high and adjusted the fibs to compensate for the new high, guess what? The bottom of that range was the 24% fib. It is now because of this new high. There's so many amazing intricacies that you'll find in the markets. The more you learn how to read the charts and understand how price flows. Now, all of the alerts come from the 30-minute chart, both the logic alerts and the concierge trade alerts. This was the opening candle last night, 6 p.m. Eastern. And remember, the alerts came out at 6:10 p.m. Eastern, 10 minutes into the life of this first candle. Now, we've got the BBC overhead. And so when we're below the BBC, as we pull up, we expect it to be resistance till proven otherwise. When we drop to blue and climbing, we expect that to be support until proven otherwise. So blue and climbing walked us right up above the BBC. And then we took out these swing highs from yesterday at about 47.76. So let's say we entered at 47.78. From 78 to the target at 88. That's 10 points. At $50 a point, that's $500 per contract traded. Once you've earned the right to trade 10 contracts, that's a $5,000 move. Now, pullback holds more often than it doesn't. Here, and here, and here, and here, and here. And then when it pulls back from below, it holds again. It runs into support. Okay. So we got below the BBC. Okay. We put in this candle, put in a leg down to this area that was established as support yesterday afternoon. When the market finds support, it will go look for resistance, which it found at the BBC. When you pull back from above, you expect support. When you pull up from below, you expect resistance. Price always reverts to the mean. Our mean is green, and it's simply called the BBC. Price is above it, we're bullish. Below it, bearish. Above it, bullish. Below it, bearish. So right now, price is trapped between resistance at the BBC, support at red and falling. Now, on a down move, red and falling is your friend. But once it crosses over and gets directly below price, then it has the potential to become support. So I wouldn't do anything until about 47.67 and trade that down to 47.65, and you got your goal for the day, if you don't already have it. Okay. So could you have traded this even though it didn't make it to the short target? Sure. This one candle right here, this last little one, it opened at 47.68 and it dropped to 47.61, about 7 points. Okay, we pull back to the BBC, and now we may be about to get another leg to the downside, but we got to overcome this obstacle first. Here's the Dow. Here's the opening candle last night. Remember, 10 minutes into the life of this candle, the targets came out. So from the open of this candle, 37,622, we ran up basically 70 points to the target. That's $350 per contract traded, $3,500 for the 10 contract trader. Don't trade above your weight class. That's a surefire way to lose whatever money you have. So when this thing finally runs out of steam, we trade below the BBC. Is there room to get your goal for the day on the downside? Yeah, there is. This candle here opened at 617, and it dropped to 534. You only need 20 points. That's almost 100. Now price is trapped between resistance at the BBC, support at blue and climbing. So will price stagnate in here for a while? It might. Before I would look to trade short, I would let price get down to 514 or even 510 and then down to the target. That gives you your goal for the day. So you got to have patience and discipline along with learning how to trade. That is part of learning how to trade. On the Russell, here's where we opened last night. We had red and falling overhead as potential resistance. Pull back to the BBC, the pullback holds. Red and falling turns to blue and climbing. We close above it. This candle right here opens at 2019.8. We'll just call it 2020 to be conservative. Runs up to 2025. It's 5 points in that one candle. You only need 2 points to get your goal for the day. So we get a leg and a retracement, and then a leg that takes us all the way to the target. We put in a slightly higher high than yesterday. Okay. Then we roll over, and we get a big move to the downside. Market finds support. Pulls back up to the BBC. Gives us another leg and a retracement and a leg. So now we're approaching this spike low from this morning, which was 2004. The low of this candle is 2005.3. Target is down at 2000. You ready, Michael?
I am.
Okay. All right, guys, we will go through the rest of the markets after Michael gives us a recap of the live training room. And we go live for 30 minutes on the TradingView platform. I'll finish up the recap of the alerts, and we'll close out with a good word for the day. Your charts look good?
Excellent. Thank you. All right, here we go. So this is okay. Good afternoon, everyone. Today is Friday, the 15th day of December, 2023. Well, if you have not taken a free trial with us, then go right here to mytradingview.com and click on this right here where it says sign up for free 5-day training now, 9:15 to 11:30. Once you click on that, you're going to be brought to this registration page right here, where all that we ask for in here is your name, your email, your phone number, and if you have TradingView, you can give us your TradingView user ID. If you have NinjaTrader, you can give us your machine ID, and we can get your indicator set up for you right away. All right, that is the way to do it. Now, on this page, you'll also notice up here at the top we have trading platforms. You can click on trading platforms and download the trading platform of your choice in here, whichever one you want to use. You can download that and get ready for the trial. All right, I would recommend you do that ahead of the trial, so we can get your platform set up on your desktop before the trial even begins. If you click on trade rules, these are the rules that we follow for every trade that we take. Right, all these rules up here are for TradingView, and the risk management and target rules are for all platforms. Okay, down here at the bottom, you have the rules for DT Pro and NinjaTrader. Those are the entry rules for DT Pro and NinjaTrader. So you should familiarize yourself with all that stuff when you take the trial. All right, spreadsheet, that should be right here. Today we had a pretty good day in the room this morning. It didn't take us too long to get the goal for the day, all things considered. We were able to trade the NQ for a few minutes this morning, so that was nice to get back into the NQ a little bit. And that was it. So if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of December, 2023. We made 12 ticks in the NQ, 5 ticks in the Russell and YM combination. That was actually 12 ticks on the Russell and minus 7 ticks on the YM is what we ended up with there. Plus 2 ticks on the crude oil and plus 12 ticks on the ES. That put us at 255 on the morning session. Today it took 18 minutes and 4 trades to get to the goal for the day. At that point, we're up $1,440. So we took a total of 14 trades this morning. So on the month now, we're up $2,622. That's over 11 trading days, averaging $238 per contract per morning session. On the year now, we're at $102,717. That is over, again, 238 days. I say 238 days, that is over 11 days, averaging $238. This is over 238 days, averaging $431. That is with one contract just for the morning session. Okay, now most morning sessions, I don't actually trade the whole session. Even today was a Friday, and I still didn't because I did a lot of training. Now, if you were to quit trading, when you get your goal for the day and you're at one contract per month, so far this year you would have had to work 88.36 hours and you would have averaged $2,443 per hour in those 88 hours. That is adding one contract per month and quitting when you get your goal for the day. Now, we have 9 business days left of this month. This number has to be over 24,000 for me to advance on to the next contract next month. So I'd be starting 2024 with 13 contracts. And this year, if I would have started with 13 contracts, this number down here would be a much bigger number. And by the end of next year, that should be a much bigger number. Okay, we're going to do the 2420 blueprint, but I think it's going to end up being a 2020 blueprint. So by October of next year, we should be up to 20 contracts probably. We'll see how things roll up. Okay, we'll see how things go. So let's get into the actual trades. Now over here on the crude oil, we did not trade all that much, just a couple. If you look at the blue arrows here, you can see the blue arrows. This one did not work out so well. This one worked out just fine. We ended up with a break even on that one. There was one here that worked out okay. This would have been a break even trade. And going all the way back to the beginning, back here was our first trade on the crude, and we picked up 2 ticks on that one. Okay. So the crude oil did give some good opportunity in there. We had just a couple of them that we took advantage of. But you see all the blue arrows all through here. Only one of them stopped out. This one right here stopped out. Actually, this one right here would have taken 2 of them would have stopped out. But again, the idea is to get the goal for the day, not keep trading. The Russell, we traded the Russell a little bit today. The markets were kind of back to normal today, not quite as far as the CME stuff goes. We did get the warning after 1 minute this morning that the CME data was coming in not exactly correctly. So we shied away from it for the most part until we saw that it was better. We worried the ES a little bit, the Russell a little bit, the NQ a little bit, and then the YM is not on the CME, so we traded the YM too. Okay, not a terrible. No, the YM traded more than anything else. We had 5 YM trades. Going back to the beginning here so we can get right to it. Here on the Russell, this very first trade on the Russell was right here. We picked up 2 ticks on that one. Then we had a break even there, and the next one that we did, see, we had some decent blue arrow trades right through there. Green arrow trades right through here worked out really well. Another blue arrow there, green arrow there, green arrow there, there. Yeah, when did we start trading it again? Now we did not have, there's a blue arrow in there. There it is. We start trading it again here. We got, we had 2, then we went to +4, and then went to +12. So I'm not sure if that's the one that got us to +12 or not. I think it is. And this one right here, we went from +4 to +12. So I think we picked up 8 ticks on that. Somewhere in there, we picked up 2 more ticks to get us to +4. And during the break, there was one, nope, that wasn't even during the break right there. That was an opportunity to go short, did not put in a lower swing. You would have just stopped at break even. During the break, there was this blue arrow here that worked out well, though you could have taken it from right here. This blue arrow here that didn't work out at all, but you see the long-term trend was pretty flat through there. This blue arrow here with the long-term trend was good. Worked out as expected. As expected. All right, so I'm getting in here. That was that. Now the ES, we traded it at the beginning and at the end, I think. I don't remember if we traded it too much in the middle. We talked about it a lot, about all the things we expected the ES to do today. And we'll see how much it did actually do. All this was from yesterday and this morning. But we've gone beyond. All right, this was our first trade on the ES right here. We picked up 4 ticks on that one. That is where we actually got the goal for the day on that trade right there, on that blue arrow. We got the goal for the day. And then we had a lot of no trade zone in here. The next trade that we took on the ES was right here. We picked up 8 ticks on that one. That was at 10.44. We picked up 8 ticks there. That got us to plus 12 on the ES, and that was it. Look at all this no trade zone that we had here. This is from just about 11 o'clock until just a few minutes ago. And this was from about 9:45 all the way to 10:15. So we had a half an hour of it there. It's just been a lot of flat markets today. Now, when I get into the next part of this, when I do the live stream, I will get into some bigger picture stuff that we're looking at today on the ES. Okay. The YM, well, let's do a couple of things here. We did the YM and we did the NQ. Now, let me make sure I got that ready to go. I do. Okay, so on the YM, we will go all the way back here. I think our one stop out on the day was on the YM. We got in here. This is our first trade on the YM. Now, I did it on the 15 range at the time. I know this doesn't look like a valid trade here, but on the 15 range it was. I was still stuck on the 15 range after swapping from the NQ. We took this short right here, and that gave us 3 ticks in profit. And then the next one that we took over here stopped us out -10. So at that point, we're at -7. Got a break even right there. We didn't trade this because the long-term direction was flat. We did take this, got another break even. Took this, got another break even. Missed that one, both of those. And that was it. The YM didn't give us all that much more. We ended up with, well, out of the 5 trades that we took, 3 of them were break even. And all the break evens went on to do well. 1 stopped out and 1 was positive. Now we'll change this to the NQ really quick. NQ. If there is such a thing as really quick on the NQ, we'll go to the age contract. And this one, I'm going to hold down the Alt button and bring it back like this. That would be the fastest way to reverse the whole thing. And we'll get back to the beginning if we can. And then we have, well, it's 12:59, so we have like a minute left here, but it's only going to take a minute because I didn't have but 2 trades on the NQ and they were both right at the beginning. So I'm trying to get back to the beginning here. Bear with me, if you will. We're almost there. It was in the pre-market. So here we go. That was 1. All right. So it was on the 15 range, mind you. So it's on the 15 range. And we'll crunch it up. And on the 15 range, we got to scroll back some more. All right. So we had a couple of trades in here. They'll be coming up here very shortly. There they are. Our first trade was right here on the NQ, and with the break even on that one, and our next trade was right here on the NQ. And we took 12 ticks on profit on that. That was all that we did with the NQ, because then the markets, CME markets, the FCM that we go through, was having trouble with their data. So we pretty much got away from the NQ. I'm just looking at the blue arrows here and seeing, the blue arrows are doing really well. If you were trading if you're using like NinjaTrader or some other place at a different FCM, you could trade all these blue arrows here on the NQ, and it looks like you would have done really well. Okay, and that was what the NQ did today. So we've been morning session with $255 a contract. It took 18 minutes and 4 trades to get to $1,440. On the month now we're 2,622, averaging 238 per day. On the year we're at 102,717. That is with 1 contract, right? With 1 contract. Averaging $431 with 1 contract for a morning session. Okay. So it's time to jump into the live stream now. So I'll start that up. And if anybody has any questions, again, you all know, just type it into the question box. Okay, if you have any questions at all, just type it into the question box and I'll be happy to answer it. Now, the thing that I want to look at here, I don't know if I can do it with this. Data wasn't working right on this. No, it's still not. So I'll look at the ES here on the 30-minute chart. Okay, because we were about this morning quite a bit, saying what it should do. Once we got down below this on a smaller time frame this morning, that's what these are from. The smaller time frame this morning, anticipating a move down to here, and if it broke through there, a move to here. Now, the thing that I was concerned with was whether it was going to stay inside this range, yellow range, all day. And it's not looking like it's got any real desire to get out of that range right now. It looks like it's all jammed up inside that range. So that is, well, that's what it's looking like in there right now. I don't know if it's going to come out of there or not. But if it does, by the end of the day, if we get below this, the highest weekly trading zone is right here. If you get below the BBC, if price starts trading below the BBC, it should try to get down to the zone down below, right? That's what it usually does. And this morning we were watching as it was to this BBC right here. As this candle was being created, pulling up to the BBC, we were saying it's going to get rejected, or it's likely to get rejected from there, and then pushed down to here. I'll push down to here to start out with, and then down to here. And so it's done all that. Now, yesterday, we were saying in this session yesterday, we had drawn this leg length in yesterday. And we were saying that it should probably go down to there. And it actually did it at the end of the session yesterday to the tick, pretty much down to that level. And that level is going to become important again. If by the end of the, well, I don't know, we don't have that much time left in the day. But it is Triple Witching Friday. So there's a lot of things that expire today. So at the end of the day today, there could be a lot of action happening. Could not, might not, I don't know. But if it breaks down below this level, we should get down toward the week. Typically, we
It
do
would
not
have to
end
fall
outside.
pretty hard and pretty fast. But it can happen.
Yeah, I would have to really, really do that. I mean, right now, there's a chance we'll get down here to the bottom of this range. But down to the weekly trading zone is unlikely. We're not usually above the weekly trading zone, but a couple of things happened this week. One, we had the options expiration. Two, we had the rollover with the options expiration. There was a futures expiration too. So we had the rollover in the middle of the week, and we had a FOMC in the middle of the week. And what was really unusual was the timing of the rollover. Usually we don't roll to the new contract when we did this month. All right, it came together in kind of a strange way this month, or this quarter, I should say. So we'll just have to keep our eye on it. And what I was saying earlier in the room this morning, I was saying if I was going to have a bias once it hit the ribbon right here, my bias would be bearish. So if I was just going to take trades in one direction, it would have just been short trades based on that bias. And if we look at this, from the time that I said that, it was approaching it right in here, I believe. Right here, it went up to hit the BBC right in here. It was 47.85 is what it was right through here. That's when we took this trade right here, 77.75. We picked up 8 ticks on that. And I was expecting it to get up to 77.75, and it did. And when that bar closed, we were up there coming off the BBC. And I was thinking then that it's going to fail from there and swing down. So the only short trade that it gave was right here. But you can see in here, there was no reason to trade anything else. But if you did have a bias, then obviously you could even put more contracts on right there on that short trade. If you did have a bias based on that information. All right. Well, that was a lot of information. Does anybody have any questions at this? Okay. All right. No questions. We'll go look at some of this we looked at this morning in our great prognostication. We're looking at Bitcoin. And, things we said yesterday in the past week or so about Bitcoin, what we expect Bitcoin to do. This is what I drew in this morning based on the most recent price action last week of Bitcoin. Now, I had said earlier last week that I thought it was going to get down to here, and it did. And I said from there, it should bounce up. And I was thinking bounce up to I'm thinking we'll probably get a wick up into this area right here, but this is the leg length right here. All right, so it should go up this far, and I'm thinking I get a wick that's going to go through that level up into this level here, the 48,000 number up there, probably possibly even a little higher. And then when it fails off of that, this right here is where it should probably get down to. So in my great prognostication, my great prediction, this is what it's going to do. It's going to spike up there and come back down here and do this and get back in here. And then I don't know what's going to do then. And then it'll be in 2024. So I don't know what it's going to do if the beginning of the year is going to be really bullish or not. But that's what it's looking like to me. Should you take action on it?
Well, there's some fundamental things
Doing something.
happening first of the year. April, we have the halving, and then the SEC rules on the spot Bitcoin ETFs in January. They're supposed to. So those could both be big catalysts. You've got BlackRock and Fidelity and VanEck and all these guys sitting on the sidelines with all this money ready to pour into these ETFs if they can get them approved.
And if that fails for whatever reason, this line that I drew right here is the line in the sand on the way down. If it drops down below that, then it should start moving down pretty quickly all the way down here. Right down to 25, 26,000 is what I think. Yeah, that's a long way down, but you've seen how fast it can go up. I mean, it ran up 26,000 in 2 months. We've gone from 26, 27 all the way up to 48. So that's almost a 50, 26, 27 all the way up to 48. It's almost 100% gain. It's like a 70% gain, something like that, in a couple of months. It can go down just as fast, even faster. All right, so while I was saying all that, we had a blue arrow there and a blue arrow there, both of which worked out just fine. And we ended up back on the NQ on the 15 range, right? NQ DOM open right now. Let me check and see if I do. It does not look like I do. Nope, I do. It's just way over here. Okay, I don't know if it's actually keeping up right now either. Yeah, it looks like it is. Okay, so we are on 12 contracts right now because we're in the 12th month. We're halfway through the 12th month. And we're on our way to get to 13 contracts for the month of January. It should definitely happen. As long as I get the goal for the day every day, then we'll get to that 13th contract next month. I think I might even be able to miss one day of getting the goal, maybe 1 or 2 days of getting the goal. As long as I don't have big red days, we should be okay getting to the next contract. You know, we're at right now, money wise, we are at 16,760. Right, 16,760. So we gotta get to 24,000. So we need like 7,000 over 9 business days. That should not be that difficult to achieve with 12 contracts. Just quitting when I get the goal for the day. With 12 contracts, it's pretty easy to achieve if I trade the whole session. But quitting when I get the goal for the day is the key. That means I have to get the goal for the day pretty much every day. The ES is going to trade here, what I just said a second ago. Gonna bump that stop to break even, a +1, and I'm gonna look for a target down there, and I don't really see one below the prior swing low. I don't really see a target that's jumping out at me. The biggest thing is 64.25. That is the biggest target, 64.25. So we'll look and see what's going on with that. All right, so we are looking here now to go a little bit lower. We're going to lock in. We now have this number that's jumping out right here to me at 47.65. So that's below the prior swing low, right? When we get below that, drop a whole point. Another 4 ticks down to 47.65. So I'll draw that number in there for you right now. I'll draw a line for you here at 47.65. Right there. Okay. And we got to get down below the prior swing low. It might actually have a decent drop once it gets through there. You know, if we look left on this, let's look left on this and see. We got to look way left on this. All right, below here, the next one is all the way down here, which is below. It's at 47.64. And if we crunch that up some more, the next one is right about this 3 and down to 61. So it could have a decent move here. I don't know that it's going to do it all at once, though. You know, the way it's been going, it's not been having huge straight up and down moves. So it's probably going to be a pretty choppy move up and down here. Let me minimize this again. And we'll do this so you can see a little better. And it is pulling back up. It's going to take me out with a couple of ticks. All right. So over here, this just missed the ribbon right there. The arrow is still black, suggesting that it didn't hit the ribbon. It looks like the ribbon got pulled down into it, though, on the Russell. Now, I don't see any questions coming up anywhere right now. Look in here. Yeah, I don't see any questions coming up anywhere in here. Really, if anybody comes up with anything, just type it in. We need to put it in the lower swing here. We got down to the swing low and it bounced just a little bit off it. Once it breaks through it, it's got the potential to go all the way down here. Now, using the leg lengths that we went over in Wednesday's lesson, this would be the start of the leg. And so it's broken it up here into 2 separate leg lengths on this move down. What the leg length would be like this, right? It would be like this. That size right there. Okay, so if you take that and you bring it over here, then that puts us right down here, which lined up to the left. Quite a ways back, but lined up to the left. So we didn't put in a lower swing. That means we're in chop right here. We're not able to take any other trades right now. Okay, not on the short side. If everything turned around to something on the long side, we'd be able to do something there. But for right now, we have nothing that we can do here on the short side. Okay. All right. Let's see. We don't have anything here. We've gone into a no trade zone. We're in a no trade zone over here on crude oil. We're in a no trade zone on the NQ. So we can go look at any other market that you guys want to. Do you want to look at any equities or any stocks really bouncing around today? Look at this. Let's see. Percent change. Bitcoin is one of the biggest movers. Micro Bitcoin and Bitcoin are the biggest movers. Sophie Technologies, that's a big mover. Lots of red in there today. Down here, what is that one? Let's click there. Oh, natural gas. Natural gas was a big mover today. Okay, and what's this? Intel. Intel's a big mover. Let's look at that. This is Intel on a daily. So let's look at it on a 30-minute chart and see what that does for us. Okay. Now, why did it say Intel made a big move up? It's showing it here is a big gain on the day. Well, this is a 30-minute chart, I guess. If we go to the daily, it's going to show it as a big move up on the day. Not a big move, a little bit of a move up on the day. It did go up quite a bit, but now it's come back and sold it all off. I don't know if they had earnings come out or anything like that. What it's looking like here right now is it's going to pull back and hit the ribbon and it's in a higher swing there. So it may give a weak bounce right here off the ribbon as we get into the end of the day. Most of the equities, as you can see in here, that were killing it the last couple of days because of the FOMC are giving it up right now. All right, still no questions, so I'm just gonna keep doing what I do here, looking around for things that might give you a reason to trade. Here, I'll blow this up and let's see, what is this? Planter. Let's pull back and see it in the ribbon. This would be a good spot to buy it right here. All right, and this did not put in a higher swing here. There was a good spot to buy it back here yesterday. Failed to put in a higher swing, so right now it's getting choppy. This is Costco, looks like. This is Starbucks, I think, right? No, this is not Starbucks. That's $1. Wow, the dollar got killed in here. Back here. When was that? On Wednesday. Yeah, when the Fed rates went up. When the Fed rates stayed the same, the dollar got killed. And it's trying to recover that just a little bit. And here's Tesla today. 30-minute chart. It's struggling. It's at a swing high right here, struggling. So I would anticipate Tesla to do a pullback, probably back into this area right here, where I have this yellow line drawn. I don't know why I drew that yellow line, but that's probably where it's going to pull back into, right in there. Nothing else in here to trade right now. So I'll keep going through these stocks. Let's see, JP Morgan. That one is bounced off the ribbon back here. Made a big move up. Now we need that to pull back down. Hit the BBC and bounce again. Okay. And Meta, what's Meta doing today? A lot of sideways action. That's not just today, the last few days. It pulled back and it ran back up. It's got a swing high right here where it was on Wednesday morning. Right? It's got support right here and resistance right here. So it's getting all jumpy. It's at a point right now, if you were to draw a triangle around this setup right now, it's really going to make a decision. And I don't know. It's looking like, to me, I would think it's probably going to go up from here, back up to the top of that range. Is what it's looking like to me. Anybody else have any ideas? Anything? This is AMD. Not really showing all that much with it. Everything else in here is just kind of flat and sideways right now. So there's not a lot you can do and trade in here right now. Not a lot you can do or trade. Let me do something here. Hold on a second. All right. So this. we're just waiting for, well, I don't know what happened there, but we're waiting for this. Waiting for this to, it's got to get down below the par swing low in here. Give us another trade setup. All right, it hasn't done that yet. This is starting to pull back, but we're in a no trade zone. This is in a no trade zone. This is in a no trade zone. So everything is pretty flat and sideways here. Don't have a lot to work with. All right. And it is 1:22, so we have about 8 minutes left in this session. I don't know that we're going to get any other trade setups in here. It's not looking real strong yet, like we're going to get any more trade setups. We'll see. We will see. Again, I don't see any questions. Anyone here? Everyone was texted to me. It's not usually that way, John. It's not usually that way. I know it is right now, but it's not usually that way. The question was, what's it going to be like, after Christmas week, that week in between Christmas and New Year's? It'll be slow, probably. But again, it's the end of the year, so there's a lot of stuff that has to happen at the end of the year. A lot of positions that have to be closed or liquidated. So we'll just have to wait and see. Right, over here on the crude right now, we're out of the no trade zone, we're testing the ribbon, and we have a down close. Now it looks like it wants to pull back a little bit deeper, back up to 72 right here. That's what the DOM is suggesting, wants to pull back up to 72 again. I know 72 is just right up above us, but that's what it's suggesting. The actual down close right here, if I blow this up a little bit for you, you can see that, oops, sorry, wrong one, this one. The black line is in the red, the down close off the ribbon. You didn't get any kind of an arrow because we didn't come out of the overbought section right here. All right, we'd only get an arrow coming out of the overbought section. Okay. Looking down here, it doesn't really have any good target numbers down there. Down below it. I'm sorry, I'm looking at my down. I'm saying it doesn't really have any good target numbers below it. It's got a weekly trading zone down below it. And the weekly trading zone is close enough. Well, it's far enough away that you would get your stop to break even from an entry where you're supposed to enter right here at 96. Here. From an entry where you're supposed to enter right there at 96. It should get down to the weekly trading zone here. Now it's already hit the zone once and bounced off it. So this is kind of a little bit risky trade, but it is the equivalent of blue arrow trade, really. It's a ribbon trade. The only thing stopping it from being a blue arrow trade is that it didn't pull back far enough to get this black line up into the ribbon. Up into the overbought. Okay, so it should push down here into the weekly trading zone. It should approach this swing low right here. Probably try to get down to that swing low right there. Right, this is the only market that's actually giving us anything right now, so we'll just focus on this one. There were some questions this morning about, what markets you should focus on, how many markets you should trade when you first start out. And it should definitely not be, 4 markets at once or 5 markets at once, whatever I got going on. It should probably be just 1 or 2. And something that is probably an index and something that's probably not an index, something that's 2 things that are probably not on the same exchange. And if you're going to do indexes, if you're going to do 2 indexes, you could do that with the YM and any of the other indexes. Most of the indexes are on the CME. But if you get them on different exchanges, then if something happens with one of the exchanges, like is happening frequently right now with the CME, you can trade things on the other exchange without worrying about it so much. So we have about 3.5 minutes left here. I don't know if this is going to do anything one way or another. I really have no idea what's going to happen with this. Hopefully it's going to push down and give us a little bit of something. Today is the 15th. And there it should push down now. Let's look at the other symbols and see if we have anything going. The Russell managed to get out of the weekly trading zone and get a little bit of bullish separation there, and that's good. That's good for the crude too, because usually if the index is going up, the crude's going to go down. The ES surprisingly didn't continue down right here. It pulled back up, but now it's just going into a no trade zone again. This is about to trigger here. I think it's about to start moving. The NQ moved up and it separated the outer bands a little bit, so it's got a little bit of bullish separation. And AMD is not really giving us anything to work with. I'll just go back to the four charts right here. Okay. Let's see, in the live stream, did we have anybody ask a question in the live stream? Let's see. Even my live stream running. There it is. Oh, that's because this is just going to be right. But it is right. Here we go. See, I'm glad that I'm not trading on the TradingView down, because every time I did that, it would log me off of my down. That would drive me nuts. That happens way too often. All right, so we need 4 ticks in profit. It's got to hit 92 right here. 92, and then we'll bump that stop to break even. Okay. Now, 90 is where the weekly trading zone is. So the rule about taking a trade into the zone is you have to have enough room to get your stop to break even from your entry point. It's my rule. It's my rule. And I'm the one who has to stick to it. I get to make them up. All right, so I did get something. That was at 112. Seeing a possible long on AMD. Groove, look, there it goes. There it goes, guys. Stop to break even on that. I'm gonna lock in 1 tick. Now, the prior swing low is where it should get down to, all the way down to 81. I'm going to throw a target down there at 81. If it gets down there, that'll be 15 ticks in profit. I'm going to lock in 2 now. If it gets down, it'll be 15 ticks in profit. Okay. And the NQ, I didn't get filled. I didn't get filled on. See, my order's waiting way down there. So I'm going to cancel that. And the Russell put in a higher swing. That's good. And we got a higher swing over here on the YM too. So this is all good stuff. Markets are starting to do what they should do. It's just taking them a really long time to do it. Okay. We want to see these. I see these indices, all the indices anyway, are starting to turn up right now. We really want to see the ES. I think it would be structurally more healthy. We just got to put this on that crude. Structurally more healthy if it were to go down rather than up right now. Doesn't really matter. We'll trade what's in front of us. All right. So I didn't even say this the whole time. If you are watching in the live stream, if you're watching in the live stream and you have not taken a free trial with us, go here to mytradingiq.com. Sign up for the free trial right here. Click on that right there. Sign up for free 5-day training now, 9:15 to 11:30 Eastern time. All right. When you do that, it's going to bring you to this page. This page. It's going to bring you to this registration page. And on the registration page, there's no credit card required for the trial. You just got to fill out this little form, give us your email, your phone number, that stuff. Down here at the bottom gives you TradingView user ID, okay? Once we have that, we can enable the indicator set for you. We can't do that until you give us your TradingView user ID, right? Then we can enable your indicator set for you. All right? And that is where we're going to wrap it up. We went over just a little bit. So with that, I'll pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne's not ready yet. Okay, there it is.
I'm ready.
Excellent.
And there we go. Okay, recap of the morning session.
Today, I believe it took 18 minutes and 4 trades to get to $1,440.
Outstanding. Good job.
Thank you. All right. I'm going to stop the live stream right now before I forget.
Okey-doke. All right, guys, we were on the Russell as we were completing the recap. And again, this is where we opened. This was the opening 30-minute candle last night, and it was 10 minutes into the open that we put out CTA targets. As you can see, once we got above, and climbing, there's one candle, this right here. We'll call it 2020 to be conservative. It ran up to 2025. That's 5 points in that one candle. That's $250 per contract traded. You only need 2 points to get your goal for the day. We get a little bit of a pullback. Markets rarely travel in a straight line. Leg retrace, leg retrace, leg retrace, leg retrace, leg retrace. Get the idea. Okay, so we went all the way to the target. Now, had you had entered way back here, 2020, all the way to the target would have been 16 points. 16 times 50 is $800. And if you've earned the right to trade 12 contracts like Michael, 800 times 12, $9,600. Here to here. Maybe even went a little further. Then the market ran out of steam. We got a big leg to the downside. We bounced. The market finds support. It goes look for resistance. Resistance is what we expect when we pull up to the BC. Another leg down. Another retracement. Another leg down. So, for instance, this candle here, I mean, you could have done all kind of stuff over here, but if you just waited to here, this opened at 2016.60. So we'll just call it 2016. $15 points at $50 a point. I believe they call that not too shabby. So whether you got it on the way up or on the way down, good job. Q, which we opened last night. When climbing, it's a bullish cross. When the blue line crosses above the green line, pull back into the UVC, the pullback holds. Boom, we get above, close above all these previous highs. Okay, you could have got in around here. Let's say you waited to here. I opened at 790 order and ran up to 802. So basically $200 per contract traded in that one candle. You get a little pullback, a little higher, a little retracement, kind of topped out, pulled all the way back to the BVC, spiked it, but pullback held. And where did it send us? To the target, through the target. But why did price stop here? You see this high established yesterday afternoon? right here. Look at the horizontal line on my cursor. So our traders knew ahead of time to expect potential resistance at 16,883. The high was 16,887. Okay? Better to be conservative with these kinds of things. I don't mean politically, I mean financially. Okay? So we're sitting on top of the BBC with a red candle. Balloon climbing's directly overhead, which means it may turn to red and falling. If that happens, then if price takes out this low, and this low, even let it take out this low. What a great window of opportunity down to the short target. Again, today's quadruple or triple witching day, whatever the case. So there could be a flurry of activity this afternoon. No guarantee. Time will tell. Okay. Covered all the indices. So now we go to crude. Now again, this is the F contract. And on the current 30-minute candle, we've traded, well, in the last 8 minutes, we've traded 382 contracts. So the F contract is still valid today. In the room, we went ahead and rolled forward to the G contract, and I'll roll forward Sunday night to the G contract. So any alerts going out Sunday night will be for the G contract, and the trading zones on crude will be for the G contract. Okay. So here's where we opened last night. Got above everything. This candle opened at 71.63 and ran up to 71.83. $200 per contract traded, that one candle. So then we break above the zone. Back to the BBC, the pullback holds more often than not. Make another run to the upside. Another opportunity to get your goal for the day. From 71.85 up to 72.10. It's $250 per contract traded. And then back to the BBC, another pop, another pullback. Now you're not only pulling back to the BBC here, but you're also pulling back to the weekly trading zone. So that's support times 2. And we finally put in a high, 72.22. So we never quite made it all the way to the long target, but there was definitely opportunity to get your goal for the day. Then price breaks below the BBC and the weekly trading zone. Okay. Right here, you got the perfect stack. Price, step line, red and falling, BBC. And this candle opened 71.74. Just call it 71.70 so I can do the math in my head. $71.70. $750 per contract traded. I think I'm getting that right. Yeah, I got a calculator. I'll make sure. All right, one more time. Open at 71.70.7 minus 70.50. $1,190 per contract from the open of this candle to the short target. That's buying the open of this candle, just staying with it. Okay. So for the 10 contract trader, that's 10 grand. But I can't caution you enough. Don't think just because you got some money and you're very clever that you can go trade 10 contracts. You start in demo. You learn the strategy. Put together 10 consecutive days in a row. Hit your goal. And trades or less. Only then do you think about trading no money. 2420 blueprint will give you the green light to go live with one contract after you've done your 10 consecutive days in demo. Okay? Now, the first contract is funded with your startup capital, money you open your account with. Once you go live, your goal is to increase your account balance by $2,000. Once you've accomplished that, the blueprint will give you the green light to add a second contract. What's different about the second contract is you're adding that with profit you earned in the market, not your startup capital. Blueprint's going to tell you when to add number 3, number 4, number 5, number 10, all the way up to number 20. Now, don't feel obligated to trade that much size if you don't want to, okay? Blueprint's just letting you know that you're qualified. But you only add one at a time when the blueprint says it's time, and you only add with profit you earned in the market. If you can have the self-discipline to stick to that, your chance of success is greatly increased. If you don't follow it, the chance of you becoming one of the 9 out of 10 who don't make it is greatly increased. So now we got price on crude. Now this low here, as we can see, was established yesterday afternoon. Pushed us all the way back up to the zone. Now we're trapped between the BBC, resistance, and climbing support. Eventually there'll be a winner. Either price will trade above the BBC, or this red candle will drop below and climbing. One or the other. Could it just go sideways into the close? Yeah, it could. But that would be a bit unusual, to say the least. Now look at how much time. Now that you see this zone here, now all of these zones were published Monday morning at 6:15 a.m. Eastern. Once they're published, as they will be this coming Monday morning, for members and trial members, once they're published, they're carved in stone. They do not change in any way whatsoever. Whether there's an unexpected rollover, a Fed announcement, triple witching, doesn't matter. Once they're published, they're carved in stone for the entire. Now, only 3 things happen at a zone. 70% of the time will be this, consolidation. Consolidation. 20% of the time will be rejection. Okay? See, when that 30-minute candle closed, the only thing left touching the zone was the wick. That's rejection. And then there's what's called slice. Now, this is not a picture-perfect example of the slice, but price did slice through this zone like it wasn't even there on the 30-minute chart. When that happens, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. So, I mean, it did, but it's not what you would call picture perfect. So, that red candle's now turned green. Maybe we go back above the BBC, hit this resistance here. Time will tell. Gold. Okay, now here's an interesting study in gold. Yesterday, support, 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 spiked it, but support, support. And then when we opened last night, bang, down we go to support. Then we get above the BBC. Red and falling turns to blue and climbing. And it escorts price right up to the target. Now, let's say you wanted to be conservative and wait for price to overcome these highs right here. So that puts you in at about 20.54. Up to the target, $300 per contract traded. 10 contract trader, $3,000. Then, of course, when the market finds resistance, it's going to go look for support. It went through the zone, hit the target, and then closed back at the zone where there's been support, for a couple days. So we pull back to the BBC, which we expect to be resistance, and it was. Plus we had red and falling, and so that took us down through the target, or through the zone, to the target, through the target. Okay. I had drawn this window in yesterday sometime. A window of opportunity. A little more like that. So we poked about halfway through it. And often when there's a big window of opportunity or a distant window of opportunity, price will do exactly this. It'll go about halfway through, come back to the top of the window, and then finish the trip. Is that what'll happen here? I don't know. History says probably. So, in fact, the bottom of that window could be a little bit deeper. Okay. So we made it about halfway through on the first move. From 2036 down to 2034. That's $200 per contract traded. Bottom of the window is at basically 2033. Silver. Here's where we opened last night. Got below the V. This is resistance overhead. The zone. See? Resistance, resistance. Price tried so hard, so many times to break through that yesterday and couldn't. So last night, we dropped below the BBC. And while we don't make it all the way to the target this first time, this candle opens at 24.37 and drops to 24.30. That's 7 pennies. $350 per contract traded. 2 pennies is worth $100. Okay? We get above the BBC, get a leg, a retracement, a leg, a retracement, and bang, here we are at the target where we put in a little doji. It signifies that very well may be the high of the day. And we come down, we get below the BBC, okay? And well, let's say because we have potential support here and potential support here, Let's just let price get below those obstacles. 24.22 down to 24.10. $600 per contract traded right here. The market finds support, which was determined yesterday. It will go look for resistance, which it found at red and falling. And now it is again attempting to reach support right here. Now, is it possible that it will break that support? Well, look at all these quick bottoms over here, okay? Doesn't mean it can't break through it, it can. But we have to anticipate that this area is going to be support until proven otherwise. In other words, be patient and wait for that. But what if it doesn't drop that far? Well, then you won't be trading it. Well, why can't I just short it right now? Well, because you got potential support on the previous candle. Then you got potential support here. Then over here, you got potential support here, here. So I'm always going to present you with the highest probability, lowest risk trade opportunity, but more importantly, I'm going to teach you how to find them yourself. If you're willing to show up, do the work, ask the questions, you too can read a chart just like it was a newspaper, great mystery novel, whatever you want to call it. You speak the language. You understand how price flows. You know instinctively what the next high probability move is. Is the next high probability move up? Of course not. Printing a red candle. We got red and falling. We're below the BBC. Now there's somebody out there inevitably trying to catch a falling knife and go long. That won't last very long. Okay? That dog won't hunt. So be patient. If price, remember, price is always trying to get to a weekly zone. Here, here, here. And so what's it trying to do now? Since it's below the BBC, it's trying to get to the zone below. Will it make it by the end of the session? I don't know. I don't have crystal balls. But I know that this window of opportunity is about as good as it gets. Doesn't mean it's going to be a guaranteed profitable trade. There are no guarantees in the world of trading. All I can guarantee you is that you can learn how to trade if you show up, if you ask lots of questions, take advantage of your unlimited one-on-one mentoring sessions. You know, got to utilize every resource that we make available to you as a lifetime member. The euro. We opened last night, below red and falling. Pull back to the BBC. Ought to bounce. But looking left, we know we need to get above this high before we go long. Well, that never happened, did it? So price drops below the BBC, but doesn't pull away. Then you get a retracement. Then you get a definitive close below BVC. This candle opens and closes below the BVC. And it took patience and just a tiny bit of a drawdown. Actually, was the high of this candle. High here, or where you would have entered, open. High is 10,120 and 135. It should have had like a 15 tick drawdown. Takes 80 ticks to get your goal for the day. And came down to support at the zone. Bounced. Now we've traded through it. But if you look left, you've got potential support here and here. This bullish cross is potential support. So a really wonderful window of opportunity if price gets down there. Be there. That's a whopper. Almost 900 to 600. Actually, there's no reason we can't make it 600. That's 300 ticks. You only need 80 to get your goal for the day. No magic. No crystal balls. Potions or lotions. Just plain old logic. Which, the more logical it becomes, it turns into just common sense. You've probably heard it said about some child, some parent, spoke a negative confession over their child and said, that boy's so smart, but he ain't got a lick of common sense. There's a lot of intelligent traders that don't have a lick of common sense. But it's really not their fault because they've not had anyone teach them. Okay? You might say, well, common sense should come naturally. Maybe it does in life, but in trading, it doesn't. You need somebody to teach you how to do the job. So back to the daily. Got a double top here at the 38% fib extension and the high that was put in yesterday. Yesterday's high was 47.91.75. Today's 47.89. Okay, so we have a high and we have a lower high. And we're printing a red candle. Now as we come down, the low of yesterday could be potential support. The step line could be potential support. When climbing could be potential support. And we would expect the BVC to be support until proven otherwise. Remember, lots of stuff, options and whatnot expiring today. So Friday afternoons typically are pretty quiet. This afternoon, it is possible there could be a flurry of activity. So be prepared. To become a lifetime member with no recurring fees, no upsells, no nonsense, ever. Go to mytradingiq.com. Can't find the buy button, call 949-42-EMINI or email support@cfrn.net. Passport is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. And you never pay another dime. Not to us. 9 out of 10 new traders will fail because they simply don't have someone to teach them how to do the job. You want to become the 1 out of 10. You want to have at least have a fighting chance to become the 1 out of 10. Then you are going to need somebody to teach you how to do the job. Like to hire us? Go here. Not only do you get the live training room every day, but you also get unlimited one-on-one private mentoring. Strategy that you learn, the indicators that you own for life, are fluid across all markets and time frames. Futures, stocks, crypto, forex, ETFs, doesn't matter, because price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That has been in place since the inception of the markets and will remain in place until the markets cease to exist. You also receive the Logic 247 alerts around the clock, concierge trade alerts every evening, the second they're published. And you get to come to the members only workshop on Thursday night. It really is everything a trader needs, all under one roof at one low price. And right here, this alone, worth the price of admission. Around the clock support via Telegram. Now, trading can be a lonely business. We have a very vibrant trading community. You can ask questions any time of the day or night. Somebody's going to be around to help you out. Again, we have traders around the globe. So, if you're tired of being alone, tired of making mistakes and nobody to ask, what did I do wrong? Here we are. Ball's in your court. Again, pay once, member for life. No recurring fees of any kind whatsoever. Ever. It's a pretty good deal. Okay, let's wrap up this week with our good word for the day. Yesterday we talked about overcoming your shyness. Today we're going to lift the shield of faith. Ephesians 6:16. Hold up the shield of faith to stop the fiery arrows of the devil. Pay attention to what Satan is shooting at you. Fiery arrows. He knows that if he can light the fires of worry and anxiety within you, he can immobilize and defeat you. And notice what God has given you to protect yourself. The shield of faith. You have a part to play. Hold up the shield of faith to stop the fiery arrows of the devil. A shield won't help a soldier while it's on the ground or even at his side. He must lift it to cover himself from attack. The same goes for you. When the enemy attacks you with unpleasant circumstances and thoughts that cause you to worry and be afraid, you must immediately lift the shield of faith. Faith in what? Yourself? Hardly. Faith in the faithfulness of God. At times your faith in God may falter, but his love and care for you will never falter. 1 Thessalonians 5:24 says, he who calls you is faithful. He will surely do it. How do you lift the shield of faith? By saying, Lord, I trust you in this situation. Jesus talked back to Satan in the wilderness by saying, "It is written." And you must learn to talk back to the enemy as well. God's word is a protective shield that the devil's arrows cannot penetrate. When you hold it up like a shield, it's effective against anything he tries to do in your life. Satan's fiery arrows can come from any direction, from both your friends and foes. So you must lift the shield of faith. That's our good word for the day and for the week. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you, His mercy, and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.